Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, data-dependent investors eyeing inflation at the Fed and also nervous as $100 oil looms. Nike's results, it's off to a running start. Profit beat estimates, but can Nike keep itself popular moving forward? And Carnival's earnings on deck, investors eyeing third quarter revenues expected to rise, and also what the operator of these Carnival boats says about its outlook and the travel trends moving ahead after the revenge travel theme evaporates. So welcome to Beat the Street, the show that gives you everything you need to know ahead of the open. Not long now before Wall Street starts trading, we do have some breaking news just trickling through. This is the PCE price index, which is what we've been waiting on because this is the crucial inflation metric that's used to assess the outlook for the Fed's monetary policy. Expectation for the PCE price index was actually 0.5% for August. We got 0.4%, just slightly lower than expected. And in terms of the core rate, which excludes the volatile food and energy components, we were looking out for an increase of 0.2%, and we got 0.1%. So just slightly less than expected. Let's have a look at the volatility index first to see if there's a reaction there. Prior to that, the volatility index was around 16.9. Not much of a movement there. It is just a touch lower in terms of volatility. Let's have a look at Wall Street now, or otherwise known as the Dow Industrials. It's tipped actually slightly higher, edged slightly higher from where we were before those figures. It was at 33,802. It's now 33,837. And let's have a look at the US Tech 100 as well. Similar picture there, as you can see, just slightly higher after those data points came through. Now, investors are going to digest this because it's seen as one of the markers as to give investors a helpful hint as to where monetary policy might be headed. But we are also looking out for comments from New York Fed President John Williams. He speaks a little later on. Elsewhere, investors also eyeing the prospects of averting a US government shutdown. The S&P 500 and the NASDAQ, as you can see on my chart here, poised in the meantime for the worst monthly showing of the year. This is amid uncertainty around interest rates. All the three indices, including the Dow, are set for their first quarterly decline in 2023. Now, I just want to recap Nike as well, because this is an all-session stop on the IG platform. As you can see here, Nike is currently up a touch, a smidgen there. And if you look at the hourly chart, this will give you a better idea of the rise after its results. There you go. Nike saying that it's got a positive outlook, and it's also going to promise to boost its focus on running shoes. Its profit did beat estimates. However, macro concerns remain, especially for brokers out there. Barclays saying that Nike sales are growing faster than its inventory, so that's a good sign. Bernstein, however, reiterating that macro concerns remain, but they expect Nike to outperform peers on the medium term. And Wedbush, they say they see brighter days ahead for Nike. Analysts had been expecting a 2.1% rise to just under 13.6 billion. Now, the company didn't quite do that, but they did maintain its annual forecast. Nike's inventories, more importantly, also fell 10% during the quarter, indicating that the company is gaining some headway in cutting its excess products ahead of the holiday season. Now, Carnival, as I mentioned earlier, another one we're watching for you as well. Carnival out with results later on today. It's a big one to watch because Carnival is, of course, a bellwether for the travel industry. Just showing you the shares there, an hourly chart, as you can see. But if you look a bit further out, Carnival, after lockdown ended, was the darling post-lockdown, and it has come off slightly now since those highs seen back in around 2022, September 2022, as you can see there. And from there on, as you can see my channel lines, it's been quite a rocky ride downwards to where we are consolidating at around 1442 at the moment. The car industry is also another active space, especially in the last weeks, given the strikes in the US. United Auto Workers President Shawn Fain is expected to make an announcement later today on the ongoing strike against the Detroit 3 automakers. What's key is that unless we get a last-minute deal, then it's expected that Shawn Fain will launch walkouts at more Detroit 3 auto factories starting today. He will speak at around 1400 GMT, 10 a.m. Eastern. On Thursday, the union did make a counter proposal to Stellantis, but this is what Stellantis said about UAW stance. They said that the deliberate use of inflammatory and violent rhetoric is dangerous and needs to stop, and that they put a record offer on the table. Moving swiftly on, we've also got Tesla on deck, and we're watching that for you because Tesla is an all-session stock as well on the IG platform. This is the hourly chart for you. Not much of a reaction just yet, but Tesla, I can tell you, watching that because we're seeing several Wall Street analysts warning that Tesla may miss estimates for third quarter deliveries due to planned factory shutdowns and soft demand that led the automaker to boost discounts. This is according to several Wall Street analysts. Barclays, Baird, Guggenheim have blamed the potential weakness on downtime at the automakers' plants in Europe and China to upgrade equipment and prepare for the output of the Model 3 sedan and also the Cybertruck. Now, just having a quick look at the commodities side of things, because we've also had quite a lot of action there, looking at spot gold and other precious metals, because you can really trade this round the clock on the IG platform. And gold, as you can see there, spot gold has been ticking lower of late. However, they did tick slightly higher in so far this session. Let's show you a daily chart there. Looking currently at an increase of just over 0.3%. Not much there, but still slightly higher. They're headed, though, for their second consecutive quarterly decline, spot gold. And what's also interesting is that the outlook is also souring. Gold is set to drop 3.5% in its worst month in 7. Dollar bond yields are looking at their best quarters in 4 in the meantime. Silver, platinum, and palladium are also eyeing quarterly gains. Now, all this comes as the dollar has pulled back from 10-month highs, and benchmark 10-year Treasury yields have also retreated from a 16-year peak. This has lifted bullion's appeal, but both still headed for their best quarters in 4. Now, staying with commodities and oil, which is also very interesting in terms of volatility and the fact that it's been rising some 30% since the summer months. USD, JPY, so the dollar versus the yen, also a very interesting cross in terms of the technicals there. That's what IG's Axel Rudolph has been watching, and he joins us now.
Dollar yen looks really interesting to me because the currency pair has been rising over the last few weeks and months, really, to a near 1-year high. And as you can see here, we rallied to 149 yen and 70 sen this week, so very close to the psychological 150 yen mark where the Bank of Japan started to intervene last year. But earlier this morning, the currency pair actually came off on profit taking, that is to say, end of month and quarter profit taking with regards to the US dollar in general, but also as preliminary industrial production in Japan came in much better than expected. So we can see here on the chart that we retested the July to September uptrend line, but then managed to bounce off it. So this uptrend is by all means not over at all. And basically from a medium-term perspective, provided we stay above the last reaction low, and so far that's the 21st of September low at 147.32, the medium-term uptrend points towards further upside still to be seen with regards to this currency pair. What I also find interesting is the price of crude oil, because what we're seeing here as well is some profit taking into month and quarter end. And from a technical perspective, it is being accompanied by what is called negative divergence. And what we are seeing is that yesterday's high with regards to WTI at $94.25 per barrel, which was made above last week's high, has not been confirmed by the relative strength index, the RSI. As you can see here, the oscillator at the bottom of this chart is making a lower high, whereas we're making a higher high on the price chart. And that is called negative divergence. And in most cases, it does actually lead to at least a short-term correction against the previous trend, in this case, the uptrend. So what I'm saying is I would expect, given this pattern, that provided we stay below $94.25, we could see some sideways consolidation take us back down to the uptrend line here around the $89.60 level over the next few days. And we could also potentially form a top here, but that would only happen if we were to fall through the 26th of September low, which was made at $87.84. So if we were to fall through that, which is also the last reaction low, then we would form a top. Otherwise, it could just be a sideways consolidation in the oil price.
Thanks very much, Axel. I'm sure we'll check in with you when we've got the OPEC Plus meeting coming next week. Now, before we go, the last look at how the market is looking, and I want to show you this because it is fascinating. We are seeing stocks indicated higher now after that closely watched measure of inflation. The PCE was softer than expected. All this keeping alive hopes of a pause in interest rate hikes from the Fed. A similar story there. If we look at the Dow Industrials as well, there you go, a slight tick higher as we march towards the opening bell. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the Wall Street Open. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.